Hey guys, what is up? Welcome to the channel. First things first, if you're looking to make $1 billion, this is not the channel for you. Uh, I'm pretty new to all of this. I just got into options about 6 months ago. I've been investing for a little bit longer, but I've just been learning. So I'm not some genius or anything who's going to teach you how to make $1 million a month. This is going to be a progression of me hopefully getting better and learning more and more and more. And hopefully, you guys can learn something too. Or if I'm doing something wrong, hopefully, somebody will catch it. So, yeah, if you're looking to make $1 billion or anything, this is not the channel. Hopefully, one day we'll get there, but probably not. I'm just trying to learn the basics so I can make money. I just really like investing. I really like trading. I'm just want to learn more. So this is a way to keep me focused. I do have a goal for 2022, and that is just simply to beat the S&P 500, doing a combination of, you know, stocks and options plays. I have a lot to learn with the options plays. That's really what I'm going to focus on this year is, learning more about options. I do need to learn more just about investing in general, but the options plays are where I think I'm going to be putting most of my energy and most of my focus. In order to do that, though, in order to have any chance of being the S&P 500, I am going to have to clean up my portfolio quite a bit, and I've already started today. So my ideal goal is to have 50% in stocks at all times, and then 50% cash on hand. And I want to do that because I want to be able to capitalize on if there is another crash or if a stock drops and I can get it at a discount. I have always had, like, pretty much any money I had in my account, I had it put somewhere already. So I would have to sell something in order to buy something else, and I want to get away from that. And also because I want to get into more actual, like, options plays, I'm going to need cash on hand. So like running iron condors and stuff like that, I actually need to have cash on hand. I could do it on margin, I guess, but I don't want to. I'd rather just be able to cover anything I do, simply because, like I said, I'm still learning and I don't want to completely screw myself. So that's the goal, is to get 50% cash, 50% long positions, and, go from there. In order to do that, I've really been thinking about, these were no-brainers. So Clove, I got in at 850, but I was just running the wheel on them. I started running the wheel. That was the first thing that I learned with options, and I got greedy and I was just doing high premium stocks, and they bit me in the ass. I was wheeling Clove when it was like $11 or something, and then it dropped. Now it's at $4. My cost basis for this Thinkorswim, it showed 850, but because I was running the wheel on it, I think I lost around $450 total over the span of a few months of doing Clove. I definitely probably should have got out sooner and just put the money somewhere else, but I was learning. I learned not to chase the high premiums. Same thing with this VXX. This is going to be where the majority of my cash balance is going to come from. Again, I got into wheeling VXX because the premiums were stupid high, and I was printing money, and then all of a sudden it dropped from like $30 down to 20, and it wiped out all of my profits. So my cost basis for VXX is actually, I did it here, 22.63 per share. So yeah, it's not as bad as it looks. I'm still down on it. I think I'm just going to keep selling covered calls on it until I get assigned, and they get called away, and then probably get away from it because I don't even understand it. VXX is some fund that like tracks the volatility of the S&P 500, and it's just really confusing, and I don't understand it at all. So I had no business investing in it or running the wheel on it because I don't even know what it is, honestly. So I need to get away from that. So once I do that, I'll be, I think, about 30% cash on hand. I'm also going to be adding to this account every month, so about $400 every month, just to continue to grow it and, yeah, hopefully make more money. But that'll probably put me around 30% cash. Up here, these are going to be my long positions. SFM, I really like as a company, the Sprouts Farmers Market, and they've grown a lot over the past few years, but I think they're about to stagnate. So I believe I'm going to, if these don't get called away, which I think they will, so I have the January 22 call on it for 27.5. It's already over that, and we still have 20 days, 25 days or something until expiration. But if they do get called away, I think I'll just start selling puts on one contract. So I'll just have 100 share because it's way too much of my portfolio right now. I have way too much allocated to it. Yeah, almost 25%, about 25% just in this one company, and I just don't like that. Even though I think it's a strong company, I think it's stable, I would rather diversify a little bit more. So I'm going to have some cash from there, about 2,500, which will get me closer to my 50% cash goal. Riot's a weird one. I've been running the wheel on it, and I kind of got sucked into it because of the high premiums. Again, lesson learned, because I got assigned on my first put that I sold on it for 33, and then it dropped and it was down to $20. So I'm trying to decide if these get called away, which they might this week. I've been running weekly covered calls on them. If they get called away, I may just buy some shares, honestly. I don't know if I'll keep running the wheel on it because I do think that Riot will grow. It's just a really volatile stock right now, and I don't think people know what they're doing with it. So I don't know where it's going to end up, but I think it will grow over time. So, yeah, I may keep running the wheel on it just to make up my losses on the 33. I may get my cost basis down on it, but it's just a really risky company, I think, to have a large percentage of my portfolio for, so I may not run the wheel, but I do think I want them in my overall portfolio. We'll see how that goes. If I don't get assigned, I'll just keep running covered calls on it until I do get assigned. I think they are going to go up over time, but when they go up and how many times they drop back down before they kind of stabilize, that's still to be determined. PCYO, that's a company that I discovered by running wheels, just looking for high premiums. I actually really like the company though. I don't know if I have it right, but they're a waste and wastewater treatment company, right? And from their website, it seems like they're buying land and building houses on it, like developing houses. And then from there, they're selling the houses, but they still maintain the waste and wastewater treatment, which is kind of a cool business model if that's the way it actually set up. I check in on them every now and then, but there's not a whole lot of information out there. But I think I'm going to grow my position in that because I really like the company. If that is the business model, I think it's a really cool way to, not only make money on selling homes, but then also to continue to make money by doing the maintenance on the waste, So yeah, if that is the way it works, I need to actually figure out 100% sure that is. Even if it's not, they're still a growing company, and they've made money year over year and continue to earn more and more. So I like them. I definitely need to figure out more about them, but all in all, they seem pretty good. So Levi, I think the same thing with the SFM. I really like Levi, and I want to probably get down to around 100 shares and just sell covered calls on that. Having 200 like I do here, it's just too much of my portfolio into one stock. I really like the company, and it's kind of misleading because I transferred all my cash from M1 Finance over to TD Ameritrade, which is what this is. And I was involved with Levi at around $11 per share. So, but when I transferred I sold everything on M1 Finance. I didn't do like a transfer. I sold everything, and then I did the transfer of cash and then bought back in. So this is a little misleading. My cost basis is actually lower in reality, but I guess think or swim is what we're basing everything off of. So either way, they're just a really solid company, but I would like to lower my percentage of my whole portfolio and use that to diversify a little bit more. FUV, another one. I just got caught up in the premium game. I was just wheeling it. The thing is so I got assigned at $15 per share, but because the premiums were so high, I really only have like $300 invested into this. So I have 100 shares for $300. I think I'm just gonna hold, maybe keep running covered calls on them. Like right now, the premiums are really bad, so it's not worth it because this is a kind of volatile company. They basically make and sell electric recreational vehicles. And I think with the way the world is going, that could be very lucrative in the future, but they're still kind of establishing themselves and I think getting everything sorted out and going through the growing pains. So I think I'm just going to hold on to them. It's one of those things, if it works, it's going to work really well. And if they can become an authority in that market, they're going to grow quite a bit. But they're going through growing pains right now. But like I said, I only have like $300 actually invested in them now, which is because all the premiums I got from wheeling it. Ford, pretty basic, just a good solid company. Only have 3 shares. I'm going to grow that position, obviously. Carnival, I bought them at 17, around 17. I'm going to hold on to them. I was going to grow that up to 100 shares and start wheeling it, or not wheeling it. I was just going to sell covered calls and, I guess, wheel it maybe if I ever got called away. But I think that the damage is kind of over with them. Everybody says that it's going to be a long time before they're back up, but I think they learned their lesson with the whole COVID crash and how it affected them. So I think they're going to be more prepared, and I don't think there's going to be as a huge of a drop as there was back when COVID first happened and all that. I think they're a little bit more prepared now, and they know how to handle it a little bit better. Hopefully, we'll see. But I don't know if I'm going to grow that anymore. I may just leave it there. So, with that being said, doing all that, basically reducing down SFM and Levi, that'll get me to my 50% cash. And then from there, if I'm over 50%, I'm going to start really building out my foundation. I need to have a lot more like stable blue chip companies in my portfolio, so like Apple and Microsoft, stuff like that. I really want to have a solid, basis, so my account value isn't swinging as much as it does having what I have in here now. And once I do that, once I start, once I have it 50-50, and like I said, I'm going to be depositing more every month, adding to this account to, start growing it faster and faster. Once I'm at 50-50, I really want to start running like iron condors and stuff, but I'm still not comfortable with exactly how they work. And it's the same thing with, like, I'm going to eventually, probably within the next few weeks, open up a Leaps on, I think, Intel. I'm trying to decide between Snap and Intel. I think Intel is just a safer bet, but I'm really uncomfortable with how assignment works if I do a poor man's covered call on Leaps, and it's the same thing with iron condors. I don't understand exactly how all that works. Like if it falls, like on the iron condor, if it falls between, the short and the long, I don't really get how that works. So I need to research that some more and figure it out exactly before I get the bare basics of it, but I really want to understand it before I commit money to it. And I really want to do like a poor man's covered call on like Apple or something, but I think it's just too big of a percentage of my portfolio right now. So I think I'm going to start with Intel. It's a safer stock than Snap. Snap's just really volatile, and I want to keep it to where, like, if something crazy does happen and I completely screw up, I can cover it with my account and I'll have to add, $10,000 or $20,000 in order to fix a boo-boo that I made just because I was being stupid and doing stuff I didn't understand. So that's the goal for this week. I think I will actually research credit spreads more. I think I jumped too far ahead with iron condors and stuff like that, trying to learn those. I think if I take a step back and just look at like the bear credit spreads and bull credit spreads, I think there would be a lot better information about what happens if you get assigned. And then, obviously iron condors, just both of those, just one on each end. So it's, once I understand the assignment, I'll be way more comfortable, but then I need to learn how to do the technical analysis to know if doing, in order to know what play to make. And it's the same thing with covered calls. I really want to learn like technical analysis because I, like with my stocks like SFM and Levi, I don't really want to get them called away. I just want to earn the premium and then, just keep the actual stock. I mean, obviously sometimes it's going to happen where it happens, but I want to like really know when is a good time to run a covered call and when is a good time to just sit back and let the stock grow, as opposed to just continuously doing it like I am right now and risking getting my shares called away. So yeah, that's the game plan for this week. I'm going to open another covered call. I'm just doing the weekly covered calls on VXX until they get called away, and then hopefully I'll be at least break even, if not made money by the time they get called away. And if I'm not, I'll just cut my losses and start being a little bit smarter with my money. But yeah, that's the goal. Got to research credit spreads this week and see if I can figure out exactly how the assignment process works. Then I want, probably within the next few weeks, I'll start doing a poor man's covered call on Intel unless I find another stock that I like doing it with. And yeah, it should give me plenty to do. So, all right. Good luck to you guys. If you have any questions, let me know. And appreciate it.